If you woke up to headlines saying a $2,300 dividend check has just been approved and will be paid out to Americans, you're not alone. The report started circulating late at night, spreading quickly across social media and financial blogs. And for millions of people, especially seniors living on fixed incomes, that number immediately grabs your attention. $2,300 is not a small amount of money. For some households, that could cover months of groceries, utilities, or critical medical expenses. But here's the question that matters most right now. Is this officially confirmed? Who would qualify? And when would that money actually arrive? Because when announcements surface in the middle of the night without clear documentation, it creates both hope and confusion. And in moments like this, the difference between a verified government action and a circulating rumor becomes incredibly important. Before anyone makes financial decisions or shares personal information, we need to slow this down. Look at how federal payments are really approved and separate what's being claimed from what is formally documented. Hi, I'm Susan Harper, and if you've followed this channel for any length of time, you know my focus is simple. Clear, calm, verified updates that seniors and retirees can actually rely on. When headlines like this appear, especially involving large payments tied to federal benefits, it's my responsibility to walk through the details carefully without hype and without panic. In this update, we're going to break down exactly what is being reported about this $2,300 dividend check, what has and has not been officially confirmed through government channels, how payments like this are legally authorized in the United States, and what Social Security recipients should realistically expect. My goal is not to dismiss possibilities, but to make sure you have accurate information before making decisions. Because when it comes to your income, your benefits, and your financial stability, clarity matters more than speed. Let's begin with what is actually being claimed. The reports circulating overnight use very specific language. A $2,300 dividend check has been approved and will be paid. Now, that wording is important because in federal finance, the term dividend is not commonly used to describe standard government benefit payments. When most Americans hear dividend, they think of a distribution of surplus funds, like a corporate dividend paid to shareholders. But the federal government does not operate on an automatic national dividend system that suddenly releases payments without a clearly defined legislative structure behind it. So the first question we have to ask is simple. What category would a payment like this even fall under? Would it be a stimulus payment passed by Congress during economic hardship? Would it be a refundable tax credit processed through the IRS? Or would it be an adjustment tied to existing programs like Social Security, Supplemental Security Income, or Social Security Disability Insurance? Each of those categories follows a completely different approval process, funding structure, and distribution timeline. And here's where the first major point of clarity comes in. Nationwide payments to millions of Americans cannot move forward through informal announcements, late-night statements, or viral posts. They require formal legislative authorization, allocated funding, and structured administrative coordination. Without those elements in place, no federal agency has the legal authority to issue a check of that scale. That doesn't mean proposals never exist. It doesn't mean discussions don't happen behind the scenes. But a confirmed approved payment requires documentation, public records, legislative votes, agency statements, and implementation guidelines. If you appreciate updates that focus on verified steps rather than speculation, make sure you're subscribed so you don't miss future breakdowns like this, especially when financial headlines move quickly and details matter, because understanding the process is what protects you from confusion. So let's talk about that process. When a large-scale payment is truly being approved at the federal level, it follows a very structured path. First, a proposal must be introduced, usually in the form of a bill in the House of Representatives or the Senate. That proposal outlines the purpose of the payment, who qualifies, how much would be distributed, and where the funding would come from. Next, the bill typically goes through committee review. Lawmakers debate the language, make amendments, adjust eligibility thresholds, and assess budget impact. After committee review, the bill must pass both chambers of Congress, meaning it needs majority approval in the House and in the Senate. Only after that does it go to the president for signature. And even after a signature, the process is not finished. Funding must be allocated within the federal budget. Agencies must receive operational guidance, and administrative systems must be updated to handle distribution. The Department of the Treasury works alongside agencies like the Internal Revenue Service and the Social Security Administration to identify eligible recipients using verified records already on file. Payment files are created, reviewed, and scheduled. Direct deposits are prepared for bank accounts already registered. Paper checks are printed and mailed to verified addresses. This is not an overnight operation. Even during past emergency stimulus rounds where speed was prioritized, it still took structured preparation and staged distribution. That's because systems serving tens of millions of Americans cannot simply flip a switch at 2 a.m. and release funds. There are legal safeguards, accounting procedures, fraud protections, and data verification requirements built into every step. And those safeguards exist to protect both the public and the integrity of federal programs. When you understand that structure, you begin to see why documentation and formal confirmation are so critical before assuming a payment is guaranteed. Now, let's bring this directly to the question so many retirees are asking. If a $2,300 payment were officially approved, what would that actually mean for people receiving Social Security, supplemental security income, or Social Security disability insurance? The first and most important distinction is whether we're talking about a one-time payment or a permanent increase to monthly benefits. Those are two very different things. A one-time check provides temporary relief. It can help cover immediate expenses, groceries, utilities, rising prescription costs, unexpected home repairs, but it does not permanently change the base amount of your monthly benefit. A permanent increase, on the other hand, such as a cost of living adjustment, becomes part of your ongoing monthly payment moving forward. That difference matters when planning a household budget. Social Security benefits are adjusted annually through what's known as the COLA or cost of living adjustment. That increase is calculated using inflation data and is applied systematically to monthly payments at the beginning of the year. It is not delivered as a surprise lump sum labeled a dividend. If a separate $2,300 check were ever authorized, it would almost certainly be structured as a one-time payment, similar to past stimulus checks, and it would be clearly communicated as such. It would not replace or permanently raise your existing benefit amount. For many seniors, though, even a one-time payment of that size would be meaningful. $2,300 could represent several months of grocery expenses, help offset property taxes, or reduce credit card balances that have grown due to rising living costs. That's precisely why headlines like this spread so quickly, because the impact would be significant. But impact alone does not confirm approval. Timing is another key factor. Even if legislation were passed, nationwide payments require administrative preparation. Social Security has established payment schedules. Benefits are distributed on specific Wednesdays based on your birth date, while supplemental security income follows its own monthly timeline. A new payment would need to be integrated into federal distribution systems, and that process takes coordination. It would not simply appear overnight without prior notice. So, while the idea of a $2,300 check understandably creates hope, it's important to anchor expectations in how these systems actually function. That leads to the next major question: who would qualify? Historically, when relief payments have been approved, they have included income thresholds and phase-out ranges. In past stimulus programs, individuals earning above a certain adjusted gross income saw reduced payments, and higher income households were excluded entirely. Married couples filing jointly had different thresholds than single filers. In some cases, dependents qualified for additional amounts. These details were always spelled out clearly in legislative text and IRS guidance. If a $2,300 dividend-style payment were officially enacted, similar eligibility rules would likely apply. It would not automatically go to every person in the country, regardless of income. There would be defined criteria, possibly based on tax returns, benefit status, or income reporting. Tax treatment would also need clarification. Some past stimulus payments were structured as refundable tax credits and were not considered taxable income. Others required specific reporting procedures. Without formal IRS documentation, it's impossible to determine how a payment would interact with your tax situation. And that's why verified guidance matters so much. If this breakdown is helping you understand how these decisions actually work, take a moment to tap the like button. It helps this information reach more seniors who may be feeling uncertain right now. Because the more clearly we understand eligibility rules and tax structure, the less vulnerable we become to confusion or unrealistic expectations. Whenever headlines start circulating about large government payments, especially ones tied to seniors or Social Security recipients, something else tends to follow almost immediately, and that's a surge in scams. Unfortunately, fraudsters move faster than official agencies. They monitor trending topics, they copy the language being used in viral posts, and they design messages that sound urgent and convincing. If you hear the words $2,300 dividend check approved, you can be certain that somewhere someone is already drafting emails or making phone calls claiming they can help you secure that payment. This is where caution becomes absolutely critical. Official federal agencies do not charge fees to release legitimate payments. They do not call unexpectedly demanding your Social Security number. They do not send text messages asking you to confirm bank details to avoid delays. And they certainly do not offer early access in exchange for gift cards, wire transfers, or prepaid debit cards. Those are immediate red flags. During previous stimulus rounds, scammers posed as IRS representatives, Social Security officials, even Treasury agents. They relied on confusion and urgency, and late-night breaking news creates exactly the kind of environment they exploit. The safest approach is simple: never provide personal information in response to unsolicited communication. If a payment is truly approved, it will be distributed automatically using information already on file with the Social Security Administration or the IRS. There is nothing you need to sign up for in a last-minute phone call. Protecting your identity and your bank information is just as important as verifying the headline itself. Because while hope is powerful, it should never override caution. So, how would you actually know if a $12,300 payment had been formally approved? Real federal payments leave a very visible paper trail. There would be official press releases from government websites. There would be public records of legislative votes. Major national news outlets would reference documented bill numbers and sign legislation. The Social Security Administration would publish guidance explaining how beneficiaries are affected. The Department of the Treasury would outline distribution timelines and, in many cases, recipients would receive written notices either electronically through secure government portals or by mail explaining eligibility and expected payment dates. Distribution would follow structured methods: direct deposit to bank accounts already on file, mailed paper checks to verified addresses, or deposits to existing government benefit cards. These systems require preparation time. Payment files must be generated and verified. Banking networks must be coordinated. Even during emergency economic relief efforts, there was a phased rollout, not an instant overnight transfer to every eligible American. That structured approach protects against errors, duplicate payments, and fraud. It also ensures that eligibility criteria are applied consistently. So, if a legitimate $2,300 dividend-style check were enacted, the announcement would not rely on vague language or social media summaries. It would be supported by documentation, timelines, and detailed explanations of who qualifies and when funds would arrive. Until those elements are present, the responsible position is to treat unverified claims with caution and wait for official confirmation through established channels. So, after walking through the claims, the process, the eligibility rules, and the way official payments are distributed, here's the grounded reality of where things stand right now. A nationwide $2,300 dividend check cannot move forward quietly or informally. It requires documented legislative approval, allocated funding, and coordinated implementation through federal agencies. As of this moment, without formal public records showing those steps completed, there is no verified confirmation of a finalized scheduled payment being released. That doesn't mean conversations about economic relief never happen. Lawmakers regularly debate ways to address inflation, rising healthcare costs, housing pressures, and the financial strain many retirees feel. But debate and approval are not the same thing. A confirmed payment would come with clear eligibility rules, defined timelines, and structured communication from official sources. And until that level of documentation exists, the safest approach is patience paired with verification. Economic policy can evolve, and relief measures can be introduced, reviewed, and sometimes passed. If anything changes in a verified and documented way, you can be certain it will be publicly announced with details that leave little room for ambiguity. My commitment is to continue watching those official channels carefully and breaking down any confirmed developments in clear, straightforward terms so you don't have to sort through noise or hype on your own. Because at the end of the day, your financial security deserves facts, not rumors, not overnight excitement, and not pressure-driven decisions. If a $2,300 payment ever becomes real policy, you'll see the documentation. You'll understand exactly how it works, and you'll know what to expect. Until then, steady information and careful verification remain your strongest tools.